Hi, my name is Sylvia Inks, and I'm the founder of SMI Financial Coaching. I am so excited that you are here. I've worked with and seen many entrepreneurs who are great at what they do. They've got a great product, they've got a great service, but they're secretly struggling with the finances in their business. Today, I want to share with you the biggest financial mistakes to watch out for as an entrepreneur. A few key things to keep in mind: being great with your personal finances does not automatically mean that you are great with business finances. I've seen both new and experienced entrepreneurs make some or all of these mistakes. And I've also worked with six-figure business owners who have made some of these mistakes. So let's get started. Here's a quick overview of what I will be covering. 1, introduction. 2, common goals of small business owners versus the reality. Next, I'll do these 7 financial mistakes. Then I'll do a recap, including list of action items if you find that you are making one or more of these mistakes. And then I have a bonus for you if you stick with me until the end. So let's get started. So who am I? Again, my name is Sylvia Inks. I am a coach for coaches, consultants, and service-based business owners. I'm the author of the book, Small Business Finance for the Busy Entrepreneur. And I help entrepreneurs save and make more money by creating additional income streams in their business. 3 common goals that I see almost all small business owners have. 1, make money, otherwise it's called a hobby. 2, save time. And 3, reduce stress. However, the reality is, most small business owners are not making the money that they need or want in their business. They're not saving time. They're actually working more hours than they ever expected. And they're not reducing stress. They're actually more stressed than ever before. So now let's dive into the 7 biggest mistakes and how avoiding these mistakes will actually help you reach one or all 3 of these goals to make more money, save time, and reduce stress. Mistake number 1, commingling your personal and business money. When you worked in corporate America, did you ever loan your boss or the company money? Assuming the answer is no, if you would never do that in your corporate job, then why are you doing that in your own small business? Remember that the business and you and your personal life, these should be kept separate. Now, if you've been making this mistake and you've been commingling your funds, and if you are ever audited by the IRS, you could, 1, lose the legal protection on your business, and 2, get fined and have to pay a penalty and interest fees if any of the expenses had been incorrectly flagged as a business expense, but was actually a personal expense. So I'm going to actually share a couple real-life case stories with you. I had one 6-figure business owner tell me that she used the personal family checking account for her business when she was starting out because it was just a part-time business. A couple years later, she felt extremely guilty when she realized that she had accidentally spent more money on the business than the business had brought in. That meant she accidentally spent the family vacation money and money that was actually supposed to be set aside for the kids' sports and activity. Another example, I had a business owner tell me that every December, her husband would hand her a highlighter and a physical printout of all their credit card statements for the year and asked her to highlight one by one which ones were business expenses so he could claim it on their taxes. Yikes! So keep in mind, make sure that you have a business checking account and a separate business credit card or debit card to run your business. And having a business checking account does not mean that you have not accidentally been commingling your personal and business finances. For example, If you have a business credit card and you are using it to pay for personal expenses as a form of paycheck to yourself, then that's actually commingling. And so this can become a major issue if you are ever audited by the IRS. So just make sure that you don't do it. Mistake number 2, not having an emergency fund or savings fund for the business. Most people hear about having an emergency fund for their personal finances. So they do this for their personal money and shop around for the best rates and the best accounts. But for their business, I find that many small business owners keep all of their money in one checking account. So by keeping the money separate and having a separate account, it just gives you that mental permission to spend or invest when you know that you have enough money set aside for emergencies. And by keeping it in a separate account, you can't accidentally spend it on non-emergencies. So I want to share with you a couple real-life examples. So I had a client who was consistently keeping around $70,000 in her one checking account. She didn't feel like she had enough money to open multiple accounts. But after working together, she opened a savings account just for the business emergency, and she made $35 in the first month. And she also shared that it allowed her to easily see how much money she had to invest in business opportunities when they came up. I also know another business owner who ran a pretty lean business. She didn't have a lot of monthly operating expenses, but then her father suddenly passed away. And she decided to step away from the business for about 2 months to grieve and be there for her family. So even though she wasn't working, she still had monthly bills to pay, including all her monthly subscriptions. And she also had to cancel a workshop that she had already collected money for and had already spent the money. And so when she offered to reschedule the workshop in the future, some of those clients and customers asked for a refund, and that was money that she did not have. Mistake number 3, not having tax money automatically taken out. So if you worked in corporate America, the company does this for you. When you start a job, HR hands you a tax form to complete, and so the company does this for you and takes the taxes out before it gives you your paycheck. And so when you start and have your own business, remember that you are the company. You need to make sure that you take taxes out before you pay the rest of your bills and yourself, because you don't want to be empty-handed when it comes time to pay your quarterly taxes or your monthly sales tax, because this can cause a lot of stress if you realize too late that there isn't enough money in the checking account to pay the taxes. Mistake number 4, willing to work for free, aka not having a paycheck. A lot of small business owners tell me that they haven't paid themselves yet. They give me lots of reasons, including the business isn't making enough money yet, or sales fluctuate, so I don't know how much I can pay myself. Or they pay themselves sporadically throughout the year and say, whenever I look in the checking account, if there's enough money, I'll pay myself a paycheck. But having this money mindset can actually hold you back, even if your business is doing better and making 6 figures. Because I've known small business owners who do have a 6-figure business, but they haven't paid themselves a steady paycheck or owner's draw. And it's not for lack of money coming in. So let me ask you, would you work for another company without the promise of a paycheck? I'm assuming the answer is no. But even if you had a sales job that was 100% commission, you would be expected to be paid based on your results, right? If that's the case, when you start your own business, why wouldn't you treat yourself the same way? So essentially, think of yourself as employee number 1 of your small business. Mistake number 5, lowering your prices and discounting on the fly. Just don't do it. It is harder to increase your prices afterwards. If you were in corporate America, you wouldn't lower your asking salary when applying for a new job, right? Because you know what you're worth. and you know how much money that you need to be making in order to pay your mortgage, utilities, food, and other bills. However, I find many small business owners do not know how much it costs to keep the lights on in their business. They don't know how much they need to be making in order to be able to pay their bills and themselves. So then when they get into sales conversations, they start getting nervous talking about money, especially if money hasn't been coming in, and they tend to lower their prices or even give discounts on the fly. Mistake number 6, trying to do it all. While you may feel like you can't afford help and you just can bootstrap the business at the beginning, trying to run the entire business by yourself can actually cost you more money, either in actual costs or opportunity costs. For example, I had a client who was behind in managing her inventory system. She didn't want to pay anyone to help her, but then she found herself in situations where a customer would purchase a product on her website and be given a delivery date. But then she realized that she was out of stock of some of the materials that she needed to complete the product. Then she would have to pay for rush shipping fees to get the materials sent to her house so she could make the product. And then she would have to pay rush shipping fees in order to get it to the customer on time and by the promised delivery date. And when we calculated this, we found that she often paid around $25 to upwards of $50 in these rush shipping fees. So in the end, she actually didn't make money and sometimes lost money on these shipping fees. So all she needed to do was hire some temporary help to get her up to speed so that she didn't get herself in these situations. So here are a few recommendations for how you can buy back more time for yourself and the business. Outsource work if you are getting behind or you're doing tasks that aren't in your line of genius. A great resource is a site called Upwork. I've hired people that are website developers, as well as a graphic designer, marketing person. You can post a job description or a description of the project that you need help with, and then you can just wait for people to apply. Also, use a scheduling tool to book your meetings with prospects, clients, and colleagues. How many of you have ever had to trade 3 to 5 emails or even more to try to find a date and time that worked for both of you? Right? I've actually had that happen to me once where I lost a prospect. I lost a sale because it took way too long to find a date and time to meet. On the last email exchange, she said, "Thank you for your time, but I already found somebody that I could meet with sooner and I've already hired them." So you may be losing out on sales that you're not even aware of. My favorite scheduling tool, is Book Like a Boss. Next, make sure you budget for a virtual assistant sooner than you think in your business. You may be doing some administrative tasks, that are $10. Maybe you could find somebody for $10 an hour to do. And by outsourcing that, you can make even more money in your business because it buys you back that extra hour to go spend on your business and get in front of clients and make a sale. Also, use a social media scheduling tool. Everyone knows that you need to be on social media, but find a tool that will help you automate and reshare evergreen content. So that way you're not spending your time or paying for a social media manager to only create and post content once. My favorite tool is called Meet Edgar. You can load in content once, especially if it's evergreen, and it can reshare it. And basically, like a jukebox, it will go through the content and will randomly go through and repost the ones if it runs out. Mistake number 7, only accepting cash or checks. So I am not a fan of requiring customers and clients to pay only by cash or checks just so that you can avoid the credit card fees. A few main reasons why I do not like cash or checks. 1, other business owners, if they hire you, they will have to send you a 1099 every January if they pay you over a certain threshold in one calendar year. 2, bad checks. I've seen business owners who have received bad checks from clients. And so when the checks bounce, there are return check fees that you have to pay. So essentially, you have to pay the penalty for cashing a bad check. And while you can always follow up with a customer to pay you, you do run the risk of never getting that money, especially for work that you've already delivered. And 3, it typically just takes longer to get paid if you don't accept credit cards, because requiring cash or checks is just inconvenient for your customers. You are now asking them to find a physical check, put a stamp on an envelope, and mail it to you. So if they get your invoice when they're on vacation, you're not getting paid until they get back. And so if it takes you longer to get paid, you do run the risk that you aren't able to pay your own bills on time, and you may end up incurring a late fee or interest fee. Given that I don't like cash or checks, I do want to share a few tools that do make it easy for customers to pay. One is PayPal. Almost everyone knows and has PayPal these days. 2, Square. 3, FreshBooks, and this is an alternative to what a lot of people know is QuickBooks. So PayPal and Square are great for point of sale. So if you've got a line of, say, 30 people that are standing in line to buy your book at the end of a presentation, Square is great because you can use a device to swipe a credit card and be able to quickly take money. You can't easily do that with a tool like FreshBooks. FreshBooks, you would have to create a customer in the system first, then be able to attach an invoice to that customer and have them pay. So having FreshBooks only wouldn't be good if you do have those point of sale type transactions. Now, the great thing about having a tool like FreshBooks or QuickBooks over just having PayPal or Square is that these accounting tools do have system reports that they can generate, like your profit and loss statement. Your P&L statement is what your CPA needs to do your taxes every year. And 2, you can also get reports in these accounting tools to help you figure out where, let's say, outstanding invoices, how much do you have in outstanding invoices, and to be able to quickly resend those invoices. So you can set up, I personally use FreshBooks, and I have system generated reminders. So I will say, send a reminder to the customer 3 days, 1 day, before the invoice is due. And hey, send a reminder 3 days after the invoice is past due. Then you can also, my favorite feature is to tack on an automatic late fee. You can say that if an invoice is so many days past due, the system automatically generates either a percentage or flat fee late fee to the customer. So here's a recap of the biggest mistakes. 1, commingling personal and business money. 2, not having an emergency fund or savings fund for the business. 3, not having tax money automatically being taken out. 4, being willing to work for free, aka no paycheck. 5, lowering your prices and discounting on the fly. 6, trying to do it all. And 7, only accepting cash or checks. So if you've been making any of these mistakes, then here are your action items to avoid these expensive financial mistakes. 1, open a separate business bank account for your operating expenses. Open one business bank account for your business emergency fund. Next, open a separate business bank account for your taxes, and then create a system to regularly transfer money into this account. And you'll want to check with your CPA on that amount. 4, set up an automatic payment or transfer at least one time a month for your owner's draw or paycheck. Next, calculate your cost of goods sold and the time involved so that you know what your minimum asking price should be for all your products and services to ensure a profit. Outsource tasks that you can hire someone to do cheaper and faster. And then allow customers to pay by credit cards and then account for those processing fees when you do your pricing. So your bonus item for sticking with me until the end, I do have a free mini course for you. It's for the 5 top tools to help you save time and money in your business. So you can go to smifinancialcoaching.com/FinCon. So what questions do you have? Have you been making any of these financial mistakes? Let's take a look at a few questions that I often get. Commingling. Can I just use my business credit card to pay for my personal expenses and claim that as my owner's draw? That's actually still commingling, and it gets messy because there's a higher chance that you will forget that expense was for personal reasons, and then you or your accountant will accidentally claim that towards business expenses for tax deductions. Then, if you are ever audited by the IRS, you will have to pay a penalty and late interest fees. So just don't do it. Question number 2. Can I just use my personal emergency fund if there are unexpected emergencies in the business? Again, remember, you need to treat the business as a completely different entity from you and your personal life. So if both of you have an emergency, who wins? Who gets to spend the money? So make sure you have a completely separate emergency fund for your business. Question number 3. Does this separate account for taxes need to be a checking account or a savings account? So the IRS, and I believe most, if not all the states, they will allow you to pay your taxes directly from a checking or a savings account. So the answer to this question, it can be either. Just keep in mind that most savings accounts, they have a maximum number of withdrawals per month. So as long as you don't think you will go over that, then go ahead with a savings account so that you can make more interest. But be sure that you open a business savings account, not a personal savings account. Question number 4. What if I'm not sure if I could pay myself the same amount every month? So if this is you, you have 2 options. Number 1, treat yourself like any other expense in the business, and you can start off small, something like $50 or $100 a month. And then you can increase this as you start to feel more confident and have more money coming in. The second option, you can also pay yourself a set percentage of last month's profits. So for example, 25% of last month's profits. Question number 5. What should I do with existing clients if I have been discounting too much for my services? So my 2 recommendations: 1, tell your existing clients that your prices will go up effective X date, and then give them plenty of notice. And then step 2, stop discounting and start focusing on how to add more value to the services that you offer to justify the higher prices. Question number 6. How do I know when I can afford to hire someone to help me? So I recommend everyone calculate what their yield per hour is. Essentially, if you spend 1 hour on the business, how much money could you earn? And then compare that to all the tasks that you do for your business, and look at the tasks that you're currently doing that you're just not good at or you don't like to do. Then find out how much it would cost to hire someone to do those tasks. And then if you can hire someone to do those tasks for significantly less than your yield per hour, then you can't afford to not hire someone. That is when you should be hiring someone to do those tasks. Question number 7. What invoicing and accounting system do you recommend? So I recommend FreshBooks because it's easy to learn and it doesn't require you to pay an accountant or a CPA to set it up, unlike QuickBooks. And FreshBooks was also specifically designed with freelancers and service-based business owners in mind. So in my business, I use FreshBooks for my coaching services. And then I use Square for people who are purchasing my books at networking events. So I'd love to connect. If you have any questions or comments, I would love to hear what you thought about this presentation. You can find me on LinkedIn, Facebook, and Twitter. And then also my website is smifinancialcoaching.com. Thanks.